Martin from Seekage, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at technical charts and try to understand what happened in the market during the day and then try to plan for a better trading day for the next day. That's January 24th, Wednesday 2024. So we had the bears take over the control today. Heavily bearish day, sharp fall. The selling intensifies. Where is the support now? That's the answer that we're trying to find out from this. So there's a wrap up of our studies. We'll come back to this, but before that, let's get with the charts. So this is the Nifty. We'll look at the plain charts first, right? Look at the candle. It's a bull trap. It trapped the bulls by moving above the previous candle's high. And then reverse sharp turn, trending downfall. That's 250 points from the top. From 21,750, it fell down as low as 21,750 fell as low as 21,200. Further below that, 21,90. So such a sharp fall is not seen too many times, except for when on December 20th, and then no, you don't see any candles like that. So since a very long time. So that's the kind of, it's a wide range, bearish, engulfing bull trap, bearish candle that you're seeing there. And look at this. This is completely bearish bull trap, engulfing candlestick that you're seeing, and the fall is more than 1,500, I believe. 48,500 to 44,900. That's a kind of fall. Huge fall. Close to close basis of 1,050 points, 1,043 points fall. And it engulfs 3.5 candles almost, right? 3 full candles are inside it. Banknifty. So it is the Banknifty that's in trouble, and it's trouble mainly because it's HDFC Bank, which had fallen 18% of more now, right? You look at that, but it closed a gap also. There was a gap here when the breakout happened on the Nifty, and all the gains of the December full month is lost. By the time January is completed, everything lost. We are back to December 1st. That's the kind of V-shaped reversal that has happened. So it's retracement of 7.7% or something on Nifty, 4.3% or something for Nifty. So Nifty still has a lot of space to go down as compared to Banknifty. It started with the HDFC Bank single stop issue. Now it's expanding slowly to other banking index as well, and Nifty is not able to follow the Banknifty. Right. So that's what it looks like. Remember that we had a sharp fall 3 days back on 17th of January. It was a nosedive from the very top. That's where it all started. That's when the HDFC result came. But the next 3 days showed an attempt to recover, although Saturday was bearish and engulfing once again. And the Banknifty also similarly, even though it was much weaker than the Nifty, after the HDFC Bank was an outcome days for sharp nosedive fall, it tried to move up 3 days, but today all the gains are lost and much more. So that's a worse day than the result outcome day. So the correction in the Nifty is extending 4.3%. That's where it is. And you have a head and shoulder pattern that's formed in Nifty. Target of that would be the height of the head. That would come to 2,700. You can move up to that easily. And to the top of the channel, retracement from the top. It has not still reached the bottom, but in the Banknifty it has reached the bottom of the channel already. It has breached that today. Easily that channel, and it is now into another previous consolidation channel where it can go, but it is very close to the 200 exponential moving average. It lost the 150, 20, all of those. Nifty just lost the 20 exponential moving average. Nifty lost all, and now the question is, would it find about the 200 exponential moving average also or not? That's the question. So if you look at the support resistances, the first one would be the previous high, which is at 21,750. Then 21,950 has got a gap resistance, I mean, and then all-time high at 22,125. Next resistance, further resistance on the upside. Downside, first support coming in at 21,065, which is 50 exponential moving average, and 21,000 is a rounding number. That will be next support, and then Fibonacci retracement of 38 would come in at 2875. If that is breached, it will go to the 2700, which is gap support that's there. We have 50 retracement close by at 2500, which also has a confluence of the 100 exponential moving average as well. That's the support resistances on the Nifty. Banknifty, look at the candle size, sharp sell by the Fyers is what you see there. The first resistance will be 46,500, which is previous swing high, and then you would have resistance at 47,100. Before that, 47 is a rounding number, would have resistance, and then 48,000 would be after that. 48,636 all-time high. That's resistance on the Banknifty in the upper side. Downside, the first support will come at 45,000. That is breached, then 44,554, which is a 200 exponential moving average, and then 43,960 and 44,000 rounding number. These are the downside supports after that. Right. So that's about Nifty and the Banknifty support levels. Bollinger Bands, if you see, you can see that the expansion is happening on the downside. It's breached the median of the Bollinger Bands, and it indicates further expansion on the downside. It's working on the bands on the downside basically. Extremely bearish pattern. And Bollinger Bands on the Nifty, if you see, it's also started expanding, and then it indicates further expansion on the downside with a bearish bias because it's below the 20 moving average median. Let's just quickly wrap up. So we lost how much? 1.5%. 333 points a single day. 1,043 points single day in Banknifty. 333 points in Nifty. 0.5%, 2.26%. Big breakdown, crackdown. Bears taking over. That's what is happening. Remember, we had a 31% from the previous swing low, and 26% of the Nifty on the Banknifty. That is the kind of move that we talk about now. The correction existed to 4.3% to 7.7%. It's almost double of Nifty is what Banknifty is. The intensity of the correction that's happening there. So, look at the institutional data. There's some interesting information there. The Fyers have sold 3,000 crores today in the cash market, and DIs have sold. I have tried to buy in 200 crores. So it is Fyers selling that is happening, and in 5 days they had been continuously selling, and it is 27,000 crore in cash market alone. Fyers had been selling, and I'm sure a good amount of that must have been achieved. That's the kind of fall that we talk. That is the kind of sell-off that we talk about. Nifty resistance support levels, we have already seen. I am not repeating that. The momentum has slipped. Momentum indicators are saying it's sideways, falling on the Nifty, but it's bearish and falling in the Banknifty. Trend indicator ADX is also crossed over the bear zones on both on the short-term daily charts. India VIX has spiked to 7.6 from the market fall. So now it is very close to the 14.85. Time for some caution if it is spiking up to the 20-year above. Stay out of if you are a novice, and or trade very cautiously with small portion size, even if you are an expert in trading. If the volatility is climbing up to normal levels above trading. Bollinger Bands, we already discussed what it is indicating, but technically we can understand that the moment the trend is lost, market is in sideways and bearish in the Banknifty. Retracement is only 4 and 8, double of retracement in Banknifty than Nifty. Correction is more. More corrections will come on Nifty in the coming days to catch up with that of Banknifty. And head and shoulder pattern we have seen is bearish again. It has started at least at 2700 the next coming days. Since a big fall has happened today, there may be some dead cat bounce that can happen today and tomorrow and after. Next couple of days, that dead cat bounce move can happen similar to how it happened on the 17th last. An attempt to move up or a dead cat bounce or a consolidation, all this can happen. Immediate further fall may not happen, but you can roll out that also is possible. Right, so market is clearly that's what is happening. So sectors, we have only the pharma and the IT. That's right now in the bull zones. So there are defensive stocks. The market crashes. Normally, historically, IT and the pharma are the stocks, sectors, and sector indices that perform. That's what is happening. But otherwise, all other sector indices turn sideways. Today specifically, if you see all the sector indices are red except that of pharma. Now, if you look at the index, heavyweight stocks that contribute maximum to index, ICICI Bank has moved 1.5% above, but except ICICI Bank, all are in red, 1%, 2%, 1.5% likewise. And if you look at the momentum, ICICI Bank and the Nifty Infosys are maintaining the bullish momentum, others are all in the sideways falling momentum. Right? US market, the other market indices, if you see, they are green at the flat all-time high at the very top. Dollar is seeing some spike. Rupee as usual has been weak since long, managed by the central bank. We are seeing some spike, that is at the very bottom. Consolidation spike is the gold at the very top. After all time highs were converted to sell-offs at the very top in market. Yeah, that's what it is. So if you see big spikes in the gold, we could see that when it's getting shifted, it's not happening, but it's not ready to come down gold. So every dip like this could be opportunity to invest in long-term quality stocks and investing purpose in SIP mode in small chunks, not in big time. But for trading, it is a direction that we have to watch out for. The direction is definitely shifted. It is no longer up move. It is no longer down move also because Nifty is still sideways. So we have to wait for Nifty catch up with the Banknifty into the bearish zones. Once that is confirmed, then you can go for direction on the opposite side, that's downside. As long as Nifty is maintaining the sideways, the non-directional strategies could be tried out. You have to be cautious extremely because of the fact that Nifty has the most correction that may be due. So, and VIX is spiking also. You have to be extremely cautious. Monthly expiry is coming. Truncated week, you just have 2 more days for this January monthly expiry. So there can be more volatility that can come in. Be cautious about, but market direction has changed from bullish to sideways, and extreme bearishness is seen in the market. That's where we are. Now, where is the support? You have to look back at the levels that we talked about, and then place your bets as per how volatile market is. This support and resistance zone. You have to take a call on that. And that's the only thing that's in our interest is managing the risk. So we know where the markets are likely to take support. We know where the markets are likely to face resistance. Right? What else we need? And place your bets accordingly as per how the volatility is there in the market. Right now, that's what is happening. Alright, so play it safe. If it is spiking, which is spiking to 20 plus levels, means we may have corrections that may be converting into market crash, black swans, and all that can happen at that point in time. But as long as it is in the 10 to 15%, it should still be okay. It is just a extended correction. Now we have corrected only 4% on the Nifty. That's nothing. And look at how the panic is coming, how sharp the sell-off is happening. So that is why you have to be extremely careful. When the market has risen up vertically without major corrections in between, this is a problem, and that's what we are facing. So that's all I have for the day. Play it safe and then happy trading, happy learning, happy investing. If you have not subscribed and watching this, subscribe and share to friends and colleagues so that it reaches out to max. Thank you. Bye bye.